Thanks for joining us today. You've tuned into Business Daily, and I'm Lee Ji-yoon in Seoul. But before we get started, let's first get a quick glimpse at today's highlights. The U.S. Federal Reserve keeps its interest rate unchanged in its much-awaited decision for September, citing greater concern about the state of the global economy and soft inflation data at home. Korea's producer prices drop in August at their sharpest annual pace in 16 and a half years on falling global oil prices and weak demand. These stories and more coming right up. But we begin this Friday with that U.S. Fed Reserve decision that came down today, Korea time. It opted to not touch its key interest rate this month, keeping the rate near zero despite analysis pointing to a U.S. economy that might be ready for liftoff. Watching this story closely for us is our Eunice Kim. Hello, Eunice.
Hi, June. Well, this had to be one of the most highly anticipated decisions to come out of the U.S. Central Bank in recent years, and for good reason, too. It appears to mark a shift for the Federal Reserve. Here's why. Well, the decision is in, and no, there won't be a hike of the U.S. federal funds rate this time around. We now know that's how all but one of FOMC policymakers voted in this week's committee meeting, this despite Fed Chair Janet Yellen saying U.S. indicators were sufficiently robust.
Since the committee met in July, the pace of job gains has been solid. The unemployment rate has declined, and overall labor market conditions have continued to improve.
But inflation, more specifically the economy's run toward a 2% target, was running below expectations, weighed down by external pressures like falling commodities and declining import prices on a gaining dollar.
That an argument can be made for a rise in interest rates at this time. We discussed this possibility at our meeting. However, in light of the heightened uncertainties abroad and a slightly softer expected path for inflation, the committee judged it appropriate to wait for more evidence, including some further improvement in the labor market.
Experts say the introduction of the global factor marks a shift for a central bank that has typically decided based on domestic variables, spotlighting the growing significance market turbulence in emerging economies, and China in particular, are having on America's calculations.
If they'd raised interest rates, we would have seen the dollar rally continue, which would have put more pressure on the emerging markets and ultimately would put pressure on the U.S. economy. Those are the key things that they were looking at.
The decision, released 2 p.m. Eastern Time, sent U.S. indices swinging in the final hour of trading before Wall Street closed on a down note. The U.S. dollar fell to a 3-week low against a basket of major currencies, and gold reached a 2-week high as investors returned to the safe haven metal.
So, Eunice, I heard experts in the U.S. were split over whether to raise the rates this time around. I'm sure it's a complex matter. But what we do know now is that the committee is waiting for further improvements in the labor market. What's behind this?
Right. Well, the conventional view on the economy is that with a stronger labor market, this will also lead to a boost in inflation, assuming that prices will go up as wages go up. Then there's the world factor, since the global economy as a whole has not done well in the first half of the year, and many economists are warning of more downward pressures ahead. For Yellen, this means the strength in America's labor market has to be even more solid to offset the volatile global economy. And figures look to be on their way there. Unemployment, for example, had fallen quicker than expected, but the FOMC doesn't want to risk raising rates too early, thereby collapsing the progress they've made thus far, so far.
Oh, well, this was good news for emerging economies for the time being. But then how did the markets react today?
Well, sure. Let's first take a look at Korea's market close, shall we? The Kospi and Kosdaq both showed pretty significant gains on this Friday, up nearly a percentage point and 2 0.8% respectively. The Korean won also gained against the dollar. In reaction to the Fed statement earlier today, Bank of Korea Governor Lee Ju-yeol had warned uncertainty still lingered in the global market, adding the much anticipated rate hike could come in October or December. Taking a look at activity in other markets, in New York, the Dow dropped 65 points following Thursday's announcement. MSCI's Asia Pacific Index, excluding Japan, was up 30 basis points. Australia's ASX was up 62 basis points, as you see there, and Japan's Nikkei closed nearly 2% lower.
All right, so with this meeting all behind us, like you said just now, the rate hike could come sometime in October or December.
That's right. Well, Yellen did say that liftoff is still very much on the table, and there are two FOMC meetings left in this calendar year on October and December. But many economists are actually looking to December since there is no press conference scheduled for the one coming up in October. Now, there are still yet other traders who are skeptical the rate rise would even come in this calendar year. In fact, of the 17 Fed policymakers attending these meetings, 4 of them now believe the Fed should hold off with the rate hike until at least next year. That's up from the last policy meeting in June.
All right, well, let's first wait and see what happens next month, I guess.
Absolutely.
Okay, thank you so much for coming in today, Eunice.
You bet.
Korea's producer prices have dropped every month for over a year now, falling at the fastest rate in over 16 years. Latest data show that prices slid by 4.4% on year in August, due largely to low global oil prices. Our Park Se-young has the story.
Korea's producer prices have dropped to their lowest in 5 years, declining at the fastest rate since February of 1999. The Bank of Korea said Friday the producer price index came in at 100.88 last month. This is down 4.4% from the previous year, extending its downward streak for the 13th straight month. The central bank attributed the slide to falling global oil prices, which have plunged over 30% from a year earlier. In August, utilities, namely electricity, gas, and tap water fees, dropped a combined 10.6% from the previous year. The price index covering manufactured goods was over 7% lower on year, while the index for agricultural products gained 4.4%. The producer price index is a barometer for future consumer inflation. The change in the index is commonly reflected in consumer prices a month or two later. Korea's consumer price growth remained weak, with inflation standing below 1% for the 9th consecutive month in August, also driven by low global oil prices and slack demand. Park Se-young, Business Daily.
Seoul's cost of living is among the highest in the world, far outstripping its income level that sits in the mid-level range out of 71 cities worldwide. According to a study by Swiss financial services firm UBS, Korea's capital placed 11th in terms of living costs, while workers' wages before tax ranked 35th. The survey indicated that electronic goods such as iPhones, digital cameras, and laptops came with some of the heftiest price tags, but public transportation was considered more affordable compared to other cities. The study was on 122 products and services worldwide. Zurich, Geneva, and New York were ranked the 3 most expensive cities to live in. Firms listed on Korea's benchmark Kospi are expected to see a surge in operating profits in the third quarter compared to figures from last year. Financial services firm Daeshin Securities said Q3 operating profit is expected to jump 32% on year, up roughly $6.1 billion. That puts the estimated operating profit at around $23 billion, boosting the absolute value and on-year increase by the largest margin since 2011. The firm said Samsung Electronics and Hyundai Heavy Industries will take up more than 60% of the added profit. Meanwhile, the Korean government has issued a bird flu alert and ordered a standstill on poultry and vehicles moving in and out of the southwestern part of the country after 2 suspected bird flu cases were reported. The Ministry of Agriculture, Food and Rural Affairs said it is taking preemptive measures by burying roughly 14,300 birds from the 2 farms in Jeollanam-do province, where the 2 birds were found. The ban on movement, which kicked in at midnight going into Friday, will stay in effect for 24 hours. The ministry has also halted duck sales at traditional markets nationwide until Monday, and test results on the 2 suspected cases are expected to come out on Saturday. Korea has been hit by 5 major bird flu outbreaks since 2003, with the most recent case costing the country around $199 million. Nearly 4 out of 5 people own a smartphone here in Korea, a country that has one of the highest smartphone penetration rates in the world. But as the market matures, it looks like a growing number of people are going after more practical handsets. Our Lee Ju-young tells us why.
This is Luna, Korea's biggest mobile carrier SK Telecom's first low-cost smartphone. The price tag on this metal case device is around $400, but it can get as low as $85 when including subsidies from the mobile carrier. But it still comes with various high-end features.
I'm happy with a low-priced phone since I don't really need an expensive one.
These low-priced phones are handsets that are under $330. Before the government slapped regulations on phone subsidies, 80% of customers prefer to use high-end phones. But after regulations kicked in, those who favored low-end smartphones surged to 45% in the second quarter of this year. Korea's biggest phone makers have also quickly latched onto this trend, shifting their focus away from premium smartphones. Samsung unveiled its Galaxy J5 in July, worth roughly $250, which comes with high pixel resolution and a camera that's similar in quality to the Galaxy S6. LG Electronics has also revealed LG Bandplay and LG Magna in June, all under $250. Market watchers say the new releases come at a highly unusual time, given that the 3 months of summer are the off-season for new smartphone rollouts.
Customers are looking for more practical options, and they favor handsets with the functions they need instead of specific high-end models.
SK also added that although a few high-end smartphones are projected to be launched in the fourth quarter, the demand for budget handsets will stay strong for the time being. Lee Ju-young, Business Daily.
Korean scientists have come up with a new way to print 3D metallic objects using a cheaper and easier method that can roll out intricate layers, some thinner than a strand of hair. Our Oh Soo-young tells us more.
From model cars to artificial arts, 3D printing has already started to revolutionize the world. But the printing process has been slow and expensive, especially for metal objects, until now. Scientists at the Korea Electrotechnology Research Institute have made it easier and cheaper to print metal structures and even electronic devices. Through a process called electroplating, electric currents are used to create a metal layer thinner than a strand of hair. Those layers are then built up to form the desired object.
With the electroplating process, we use an electrochemically metallizing technology which lowers production costs. This makes it widely applicable across diverse fields of technology.
The recent achievement has been lauded around the world, gracing last month's cover of Small, a globally renowned research journal for material science. This new development paves the way for various industrial sectors such as IT and healthcare as a low-cost solution for small gadgets and biosensors. Oh Soo-young, Business Daily.
And that wraps it up for today and this week. Hope you enjoyed it. As always, thanks for watching, and bye-bye for now.